All right, I think we're about ready to get started. I believe Mav has the recording set up. So, thank you everyone for joining us this week on our community call, where we are joined by the lovely team at Open Dollar. Open Dollar is a new stablecoin that is building on top of rETH and has an interesting redemption mechanism that purports to make it potentially a scaling stablecoin, which we will get into a bit later. But without further ado, I'd like to introduce our guests today, Tim and Cup of Joseph. Would you guys like to introduce yourselves as founders and talk a little bit about the story of Open Dollar and how you guys found yourselves where you are now?
Yeah, sure. Tim, do you want to start?
So I'm our marketing lead, and thank you so much for having us. Rocket Pool and our ETH is one of the very few collaterals that we considered high quality enough to support from launch. We're super stoked to be here to support the Rocket Pool community. I'll let Cup of Joseph, our founder here, explain a bit more. He's the best with the storytelling.
Great. Awesome. Thanks, Tim, for setting everything up. I'm Joseph. I'm one of the co-founders of Open Dollar. We're a new over-collateralized stablecoin on Arbitrum, backed partially by rETH. So the original motivation for Open Dollar, and I think you kind of already alluded to this, was when USDC depegged last spring, and that was one of basically the worst weekends ever. And there even DAI depegged, right? Because DAI is partially backed by USDC and real world assets, which are really just treasuries that can be seized by the government at any time. And so we really wanted to build a multi-collateral decentralized stablecoin that stays true to that original mission of creating decentralized stability and giving people more safety and flexibility than anything that exists right now. So we launched about 2 weeks ago, and we're already at right about 1 million TVL. I think how much rETH has been deposited? I can check that out right now. I think we're at roughly 240 rETH has been deposited so far on Open Dollar, which is pretty sweet to see. And yeah, happy to talk about the strategies that are available to holders using Open Dollar, or more about how our protocol works and why we made certain design decisions around safety and flexibility.
Yeah, let's start quickly with that USDC depeg. Just for any listeners that aren't aware, Circle, who issues USDC, had a substantial amount of treasury bills with, I believe, Signature Bank or SoftBank, which was a bank that ended up going under, collapsing due to a variety of macro factors unrelated to crypto, despite what Elizabeth Warren might want you to believe. But the end result in on-chain was that some chunk of USDC's collateral backing was now locked behind legal barriers and could not be accessed. And as you mentioned, this had downstream effects on DAI, which was at the time really crazy. Due to the mechanics of having some partial collateral, we saw really weird arbitrage happening where part of the collateral was locked, but some savvy users were able to take advantage of discrepancies, which is a topic I think we'll get into shortly. Before we get into the mechanics, could you actually tell us a little bit about the early program that Open Dollar had with sort of allowing anyone to mint your governance tokens? I think that was a pretty cool story. Or sorry, to claim your governance token.
Yeah. So we did do an airdrop to help initially distribute governance tokens. We actually deployed the protocol using governance. So we used Tally became our governance partner for that, and we used that voting with all the governance tokens that we gave out to everyone. We used that to deploy the actual protocol, which is really cool. Decentralization maxis over here, and one of the inclusion criteria for getting that airdrop. The airdrop period is over, so it's not available right now. I just want to be very clear. But anyone who had bridged rETH to Arbitrum was eligible, and so we actually gave away about 3% of the total governance power to people who did that, and some other actions. So we're pretty happy with how that's gone, and now that the protocol's up, we're seeing pretty good engagement on governance side, and yeah, really happy to see so many people from the Rocket Pool community who have signed up to be delegates on our governance. So
Yeah, just really appreciative of that ordering you guys had, whereby you had governance set up to help take the reins immediately from the get-go, rather than launching in a completely centralized fashion and then slowly decentralizing over time. It's very much so in the Rocket Pool ethos to try to be as decentralized as you can from the get-go. So yeah, just great decision there.
yeah, thank you. I appreciate that.
So now let's move on to the actual mechanics of the open dollar system.
Sure.
So there are roughly, let's talk about what happens when price deviates. So in the system, you can mint OD, I believe that's the stable coin, 0D, sorry, which is a
Yes.
stable coin
Yes, that's
and
correct.
is backed by some non-fungible vault token, right? So can you walk me through what happens if, let's say, the market reacts really poorly to some event and stable coins start losing their peg? What does $0 do?
Yeah, so Open Dollar can react to that.
Sorry,
Maybe
yeah.
it'd be, yeah, oh, it's fine. Maybe we can run just through an example. Somebody has deposited rETH into Open Dollar. They've borrowed some amount of the OD stablecoin against that, and now they've held onto it for a bit, and market conditions have changed. Right, somebody has sold a lot of OD into the market, and maybe it's under peg. Right, so that's basically the scenario that you're talking about, right?
Yes.
So, um, there's a lot of different ways to handle that. I think the best is getting back to peg, right? And trying to create incentives for people to bring the price back to $1 where it's going to be most useful for the most amount of people. But it doesn't necessarily have to happen right away. And Open Dollar is actually a floating peg. So we're targeting $1, but it doesn't mean that it's always going to be $1 like USDC, which is just one-to-one backed by dollars. Open Dollar is over collateralized, so there's always more value in collateral backing it, but it might float to 98 cents and then float back to $1 over time due to interest rates changing. So in this example, OD is under $1, right? And that creates an opportunity for people to buy it at under $1 and bring it back to the protocol where their debt is being repriced upwards. So you're paying a very low interest rate, but the value of your debt might be changing. And the protocol has this controller that works very similar to Reflexer or to the Federal Reserve, where we're going to take that debt and reprice it up. And the rate that it's repricing is going to create a very strong incentive for people to pay back their debt sooner. And
could you talk?
Yeah, go ahead.
Could you maybe spell that out a little bit more? Like, what do you mean specifically when you say debt reprices upwards?
Yes. So in the case that it's under pegged, and the same is true in reverse if it's over pegged, but in the case that the OD stablecoin in the market is under peg, right? That means that somebody has some amount of debt. Maybe they have, let's say, $1,000 of OD, 1,000 OD that's been borrowed, and the protocol is currently valuing that debt at $1 per OD. Right, the price of that debt can be changed, so we can value the debt at $1.01 per OD. Now you owe $1,010. See, the price the price of the token in the protocol can change, and because of that, it's going to create a stronger incentive If people know that their debt is going to be more expensive an hour later, then they're going to say, hey, I don't want that. I'm going to pay back my debt right now. And they can go buy more OD from the market to do so. And that act of buying gives them an arbitrage opportunity because they get to buy OD at 92 cents or 98 cents, whatever it's underpegged by. And then they get to bring it back to the protocol and essentially pay back their debt at $1.01. Right.
I
And so
see.
that arbitrage opportunity will always be available in either direction, very slightly. Even if the price of OD is $1.000001, there's still going to be this arbitrage opportunity to sell some into the market, bring that price back down to exactly $1, and either take out more debt or pay back your debt to the protocol.
So this is a way to introduce an incentive structure inherent to the open dollar ecosystem rather than just in the open market. So like other collateral-based vaults, the arbitrage incentive might only be the difference between the DPEG value and how much you can unlock your collateral. Whereas with open dollar, it seems that the protocol itself automatically introduces additional incentive. So how does that amount of debt repricing get factored?
Yeah, so that's to be clear, our PID controller is not on yet. We're planning to launch that in the next couple weeks because we need a decent amount of liquidity in the pool before setting that live. We're going to use governance to deploy it, and we don't want to do it yet because the pool is not deep enough. It needs to be deeper to be more like tamper proof. So the question is, how do you know that your debt tomorrow is not going to just turn into, $1 million per OD, right? So there's lots of bounds on that. And how does the protocol determine to increase the value of your debt by 1% or 2%? There's this thing called a PI controller or a PID controller. And it's the same thing you have a bunch of these in your house, Jasper.
Really?
Yeah. Did you take a shower? Did you take a shower today?
I did.
Excellent. You used a PI controller. You stepped into the shower and you said, "Hey, it's a little bit too hot. I want to turn the temperature down." But your knob on your shower doesn't actually, have exact what temperature it is, right? You can't decide exactly what temperature you want the water at. You just know you want it a little bit colder or a little bit warmer, right? And so you turn the knob in a direction and maybe you overshoot a little bit and you turn it back a little bit. And that's exactly how PI controllers work. Is there's this number that we're going to tick to the right or we're going to tick to the left, and the rate that change is the I term, is the integral, right? And so basically anything that sets a temperature or your thermostat, the thermostat doesn't know make the air this temperature. It just knows put more cold air into the system, right? And so that is basically how it works for us. But with the value being how much to change the value of someone's debt, and the integral having many bounds where it says this is the maximum rate that it can change by, so that people know exactly what to expect, and that the debt repricing will happen very, very slowly. So that's kind of what we, go ahead.
So once the PID controller is then live, how do you imagine sort of the strength of it will be adjusted?
Some of that is going to be up to the DAO. We're working with 0x SideQuest, which is a firm that does modeling for different market behaviors. So we have some really great research that we've posted on our forum, and we're hoping to publish some academic papers about that in the next couple months later this summer, about how the Fed could be using this type of technology, and how to basically value your currency better through these type of lending mechanisms.
So my understanding is that the PID controller is automatic in its function, but the relative strength of it will be set by the DAO or some other, or likely the DAO. Is that correct?
Yes. Yes, that's a great summary. I think Open Dollar is a radical experiment, personally. We are building the Federal Reserve for the internet, basically. And it's probably not going to be perfect the first time that we set it up, right? But because of that, we're going to learn. The DAO at the onset, at deployment, will be able to update the intensity, the amplitude of how fast the PI controller can reprice things. And so we can react very quickly and kind of change that. We'll always publish lots of simulations and be very conservative about our risk analysis. But I'm hoping we go through this phase where we're testing the PI controller, we're responding to how it's working really well, and then we get to some point of stability where we're like, oh yeah, these are the settings that we really like. Let's turn off the governance control and leave it ungoverned, and just take as much human interaction out of this. So, Maker is voting this week to update the rates on everybody's vaults and change the interest rates. And they voted just a couple weeks ago to set it to like 15% APY.
Right, and that caught a lot of people off guard, even in the Rocket Pool community.
It did for sure. Those type of systems means that Maker is very governed. The protocol is very governed, and there's a few individuals who can set the rates to anything that they want, right? And so what are we going to do when the government says to those people, hey, we want to shut Maker down. You guys have to vote to set the interest rate to 100 million%, effectively shutting down the protocol. I don't want that to happen. So Open Dollar is much, much less governed. We're using this term ungovernance for our governance. And our governance tokens can vote to add new collateral types, but there's many fewer parameters in the protocol that governance can actually affect. And we're not going to be able to, just change the rates like that all of a sudden. The PI controller is going to do that autonomously without human intervention and with lots of bounds to lots of safety precautions to make sure it doesn't make too many changes too fast. And I think that greater level of transparency and less human interaction, worrying less about what the bankers decide and more about what our smart contracts say the market is doing, is kind of the ethos of DeFi that we're going for.
Yeah, absolutely. Honestly, Maker is kind of turning into more of an on-chain investment fund than it is a stablecoin allocator or producer, due to their governance approach,
Right.
honestly. So I really love that you guys are taking this approach towards ungovernment or minimal viable governance. Going back to the PID controllers for a second, in the early days of the PID, are there any concerns you have about what tail risks are introduced when the market is still early and the DAO isn't sure exactly what level of strength the control or amplitude, I think you said the term was, to set?
Yeah, I'm not worried about it at all. Like I said, we're going to do very conservative risk analysis on all of these conditions. And we're also posting on our forums these analysis and the research of how different positions would turn out if the market does this, if the market does that. So we're going to be very prepared. We're not just taking shots in the dark and seeing what will work. We're simulating everything, and I'm pretty confident that we might need to make a few small tweaks at various points, but I think our first version is going to be very impressive. We're using the JEB framework, which is the same smart contract framework that was used to build Reflexer. So if you know the RAI stablecoin, that
was my next question.
yeah. So it's not directly a fork of rye, but it is using the same smart contract library, Geb, GEB, and because of that, we have this years of experience watching this, doing this analysis on rye, and learning what worked and what didn't work. And so we already know what didn't work when rye went from it started at like $3
314.
and 3.14 dollars each, and then it was down only for a while because the PI controller was not set as optimally as it could be.
And
now,
Vitalik Buterin famously shorted it the entire way down.
yes, yes, he also made several suggestions to the Reflexer community. Showed up in Discord a few months ago after we had already started working on Open Dollar and said, "Hey, you guys should consider building a new version of rye that's backed by native liquid staking tokens, and maybe even redo the PI controller to target $1." So
Yeah.
it's pretty cool that he didn't even make a blog post or do anything publicly, but he just kind of shows up in the Reflexer Discord, and Vitalik just basically said, "Hey, Open Dollar is a great idea," without knowing what Open Dollar is yet.
It was actually interesting. There was some drama at the time in the Rocket Pool community because uh, we were curious on Vitalik's stance towards rETH because it wasn't fully clear at the time, and he had previously stated his concerns about Rocket Pool as an attack vector. But that's pretty unrelated. So onto the topic of Rye and their PID controllers. Uh, Actually, before stepping back for a second, there's generally two philosophies for PIDs, as I understand it. You can have a floating interest rate, or you can have a floating uh, collateral value, debt value. What are the pros and cons of those two systems?
Yeah, so I think basically the dichotomy is, should we change the interest rate or should we change the price
Right.
directly? And we're looking at both. I think there's the pro of doing the price is you get to change things more directly and faster, right? You don't have to let the interest rate, get to 15%. If you want to double the price of something, then that's going to take several years. Whereas if you can just update the price from $1 to $2, which I don't expect. I just an example. I don't expect that to ever happen on Open Dollar. You can do that more directly, and potentially that will create more transparency in a way that it's easier for people to react when they know what the next price is going to be, rather than what they know what the next interest rate is going to be, because it's just easier to do that math, right? But
Yeah.
the downside is that might make the graph of the price of the stablecoin a little bit more jumpier and a little bit less smooth, right? And so the interest rate side might make that graph much smoother. But we've also seen in the past interest rates on Reflexer were minus 20%, and people were not
Exactly.
people were not reacting to that.
Yep.
Right. And so the graph might look really smooth, but if it doesn't get people out of their seats to like be rational market participants, then that might be a weakness too. So, we're looking at all these things. It's a really good question, and personally, I would like to try doing just the basically make the PI controller affect the value directly. Because I think it'll be simpler and it'll make it easier to explain to people.
Yeah, and also there's this subjective quality that working with interest rates is very unintuitive.
Yeah.
Like you don't understand really how much you're paying at a glance or what's at risk at a glance, whereas people generally tend to understand liquidation levels. Um,
Right.
And so, like, seeing the value of the debt change is way more intuitive. So, yeah, I agree generally that I think that's the right way to do it. But honestly, we'll see it play out, and we'll see what happens. So, moving
Yeah,
forward,
we're gonna do a lot of research on both before we pick a side on that, basically.
right? So moving forward a step back to the rye conversation, what would you say are the major things you guys have learned from what happened with rye? And further, what do you think differentiates Open Dollar from the high stablecoin, which is like,
Yep.
on optimism and whatnot?
Yeah. So first, what did we learn from Reflexer? We learned that PI controllers can work if they're set well. It went down only for a few years, but it's pretty much back up to peg right now, and it's got like a 16% positive interest rate. So that means that borrowers are paying rye stablecoin holders 16% a year right now. And that was as of yesterday, the last time I checked it. So, that's pretty good. That's like pretty close to what the market rate is. Also, it didn't collapse, So we've had
Yeah,
a stable.
that's impressive.
That's pretty impressive. We've had the first stable coin, really the first currency in the history of humanity
Yeah.
that doesn't have a guy at the end that's like, this is how much it's worth. It's just smart contracts reacting to the market. And I think that's pretty cool. So we learned that this is possible and that further experiments can improve the system and make it more scalable. And then basically the next question was, what's the difference between Open Dollar and other similar stablecoins? To Hive specifically, Open Dollar is trying to target a floating $1 peg. So we're going to float around $1. And High wants High token to go up.
It's a non-rebasing token?
Yeah, the value of High I expect to be like $1.06 by the end of the year.
Oh, interesting.
Not financial advice.
Wait, is that due to the accrual of value or it's bad
Yes.
PI settings? Oh, I wasn't aware. Interesting.
That's due to the PI settings, repricing the debt and repricing it in a direction that makes the value of the token in the market go up, assuming everybody is rational, right?
Right.
There's that. It started at $1, but they're not actually trying to target $1. That's one. And then two is, we haven't really talked about this much yet, but Open Dollar has invented a thing called NFVs, non-fungible vaults. And what it is your CDP is stored as an NFT, just a regular 721, which means that you can sell your entire position as an NFT without having to pay back your debt. So this is basically a new way to trade rETH and other collateral types that we've added, and be able to get leverage, get loans without having to worry about ever getting margin called ever again, or being stuck without enough OD or whatever the stablecoin is to pay back and unlock your original value that you deposited. So the way to explain this more simply and less technically that I found makes sense to more people is you would never take out a 30-year mortgage on a house if you could not sell that house before your debt was paid back.
True.
Right? You always want to be able to sell your house for the value of the house minus the value of your loan, right?
Mm-hmm.
And that's what you walk away with. But in DeFi, if you deposit in Maker or High or Aave or Compound, and you take a loan against that position, you basically can never sell that position until your debt is paid back.
And if I am thinking correctly, you can't even really go into third-party protocols like a Pendle or a Vaults to trade the debt. The debt can't be traded.
That's right. And so on Open Dollar, because the collateral and the debt are tied to this vault, right, which is a pretty familiar concept for people who have used collateralized debt positions from Maker or other stablecoins before. This entire CDP is connected to an ERC 721, just a regular NFT token, and that token owns all of your collateral and is responsible for all your debt. So you can create a secondary loan marketplace for Open Dollar vaults. We're working on that right now, which will be launched later this year, hopefully early summer. And then Yeah, and then you can basically get out of these positions without having to pay back your debt. And if you're a stable coin holder, this brings us back to the USDC depeg that we were talking about. If you're a stable coin holder and OD has depegged really badly, or even if it hasn't, you just want to get out of your position, it might even be cheaper for you to buy someone else's vault, pay back their debt, and unlock the rETH that is inside of that. Basically, redeem your stablecoin for the underlying collateral. And that makes the stablecoin, that makes holding it way safer because that's an option, right? You can get out of your stablecoin into the underlying collateral whenever you want. Whereas if USDC depegs, you don't get to call up Circle at 2 a.m. on a Saturday and say, hey guys, send me a treasury bill. Okay, we're even.
That's hilarious.
They don't do that, and they never will because traditional finance is just not flexible. It's just not safe. You can't get you just don't have the ability to do that.
No, but here you can actually just trade the entire debt product in one go, which sounds pretty revolutionary to me. I'm not gonna lie. Like you only need a couple sophisticated market makers to be trading these debt markets to keep the peg fairly close, I would imagine.
Yes, that's kind of what we're expecting, and there's a lot of, I think, pretty sophisticated market actors right now who are super interested once we get a bit more liquidity in Open Dollar for participating there. And yeah, it's basically a new way to trade rETH, to trade rETH, to trade all these other tokens inside of the vaults. And you get to see the value of them repricing as they're listed, and can make more arbitrages and just keep the token stable. It's also bringing secondary loans to DeFi for the first time, where trading mortgages or trading loans in traditional finance is like a $3 trillion a year just in the US, and it's $0 a year in DeFi right now because we've always tied debt to accounts, and now we're tying debt to tokens that can actually be traded.
Yeah, it's kind of like the Uniswap v3 revolution, but it didn't really matter much for AMM spot positions. Like no one really wants to trade a concentrated shitcoin x ETH position as a unit, whereas with debt value, that's actually something people would want to trade.
So Jasper, before I started Open Dollar, I was working on Seaport, which is the marketplace behind OpenSea.
Oh.
I helped build that, and I did this research when I was there about why are people not trading Uniswap v3 positions on OpenSea? Why does that have $0 in volume, basically?
Yeah.
And it came down to, if someone has an ETH USDC position on Uniswap and then they try to sell that, you have no idea if that's the real USDC, right? Because anybody can make a token called USDC and put it on Uniswap, and it is so hard to filter the scam tokens from the real ones that it's just not worth the risk of ever trading a Uniswap v3. It's so hard to value them. But on Open Dollar, you know that we only accept rETH collateral, some other LSTs, and the ARB token right now, right? So every vault that is being traded on Open Dollar is really the tokens that the DAO has already approved. So you don't have to worry about fake rETH tokens being deposited in Open Dollar. It's not possible. And I think that will be kind of the separator of why did people not trade Uniswap v3 positions, but they are going to trade a ton of Open Dollar vaults.
Yeah, that tracks really well to me. The volatility of any given v3 Uniswap position, might it be a scam token, might it be super concentrated and liable to go out of range really quickly, it's just very difficult to price. Whereas debt positions are going to be super simple in theory, right? Standard set of parameters by which you can create an algorithm for pricing and set up bots automatically. And this actually reminds me of something you said earlier. You said that there is no market for debt on DeFi right now, $0. That's kind of true. There is a market for debt, but it's not on chain. It's all in Flashbots and in the MEV relay battle, all these searchers fighting it out for access to these debt markets where they will do the liquidations. So it's completely true that there's $0 on chain, and it sounds like Open Dollar will allow the debt game to move from the searchers off chain on chain, which sounds great to me.
Yeah, I think a lot of people are going to see that, and they're going to start making bots to arbitrage these, and that will help with our stability a lot long term. But it's also not just pricing the debt for liquidations. Of course, we have liquidations if a vault is under collateralized, it gets liquidated, the same as Maker, or any other CDP protocol. But it's trading the loans. Right. It's not just trading the debt, it's trading the loans. So if there's another LST, if there's you have a Rocket Pool vault and someone else has a Lido ETH vault, but the Rocket Pool vault is higher interest rate, they might swap vaults with you and give you a premium. And it might be cheaper for them to actually do that than to go unlock their collateral, sell their vault, sell their Lido ETH into ETH, go get Rocket ETH, pay fees along the way 3 times, and then open a new position. So just by holding Rocket ETH, or doing interest rate swaps essentially of which LST is yielding higher, you might be able to earn additional arbitrages there and have an entire strategy just around arbitraging the interest rates of different LSTs that are added on Open Dollar. So there's a lot of new strategies that are possible because the loans are tradable themselves.
Yeah, that's pretty awesome. I should have specified that it's not only the MEV liquidation market, but much more, as you lay out, the entire field of interest rate swaps becomes viable. Yeah, so this is a pretty exciting set of goals. How does the governance token for Open Dollar fit into this whole scheme?
Yeah, great question. So the governance token is ODG, Open Dollar Governance, and basically all of the fees collected from the protocol go towards creating value for it. Where if you pay back your debt, that debt goes into a surplus and gets auctioned off. Very similar to how the Maker surplus auctions work. It's pretty much exactly the same as that, but with some slight efficiency improvements, in my opinion, and what happens afterwards is a little different. So 50% of all of the fees accrued after auctioning off that go to buying and burning the governance token. So there's another auction, right, where we are selling the OD fees that the protocol has earned, and this is all autonomously. It doesn't require any human input to buy ODG from the market and to burn it. So 50% of the fees are always going to buy and burn ODG, and then the other 50% goes to the DAO treasury. So we are accruing OD, the stablecoin, and 50% of that ODG that we bought, 50% is burned, and the other half is sent to the governance treasury as well. So we're accruing our stablecoin, and we're also accruing half as much in the governance token to the DAO treasury. I think a lot of DAO treasuries right now are 99% their own native token.
Yep.
And so I'm very excited to see this module kick in once we start earning more fees, where our governance treasury is moving towards being 50% stablecoins and 50% or theoretically 25% ODG.
Wow,
So,
lots of great stuff to say about all that. On the topic of accruing stablecoins to your treasury, that's fantastic. A diversification of a DAO's treasury is key to survival long term. Our own grants and bounties management subcommittee, they convert a portion of their annual income to stablecoins so that they're able to pay regardless of the RPL price swings. Then on the topic of buy and burn, that's also very hot in the Rocket Pool ethos, as we are contemplating an upcoming tokenomics change. So I have a question about your approach to buy and burn, because this is something, again, that's being debated fairly hotly,
Yep.
specifically on how to implement this without leaking value to third parties. So MakerDAO is probably the most famous example right now of having a buy and burn mechanism. However, this buy and burn mechanism was notorious for being exploited in the past. So what are your guys' thoughts, and how are you approaching this problem?
Well, I think any type of auction, you're always going to leak a little bit of value. But if it's a very small percent, it doesn't matter, because participants who are keeping the protocol running and keeping it going and participating in this auction that is required for the protocol to continue to exist, they deserve some reward too, even if it's very small. And if there's enough participants, any type of auction should be competitive. And if it's not competitive, there's different things we can do to make it more competitive. So specifically, our surplus auction works like this. We have, let's say, $1,000 of OD stablecoin, right? And where we've accrued that as fees, we're going to sell that and say, okay, market, here's 1,000 OD. How much are you willing to pay in ODG? And absolutely anyone in the world can go buy ODG from the Camelot pool, or maybe they got some for being an rETH bridger to Arbitrum and they already have some from the airdrop. They can come to this auction and say, okay, what's the current value of ODG? What's the current value of this OD that is being auctioned off? And I'm willing to pay $995 in ODG at the current market price to buy this $1,000 in OD in the stablecoin, right? And sure, you just leaked $5 in value. But if somebody else says, okay, well, I'm going to pay $997 in the governance token, well, now you only leaked $3, right? And so you get this auction where anyone can bid at any price, and basically the highest price wins. There's a few other parameters that the DAO can set right now about how long between bids, or the minimum length of time that a auction should go for. I think you're always going to leave some room for an arbitrage for somebody, but that's by design, right? We want people to participate in this. They need an incentive to do that, and so there should be an arbitrage fee. However, the longer that they're holding ODG, they're exposed to ODG price swings. So they're taking on some risk, and they deserve to have that priced into the auctions as well.
I think a Dutch auction makes sense. I think that's pretty solid approach. I'm not sure if that's one that we had considered ourselves yet internally.
There's different ways to do it. I really like how ENS works. If you've ever seen an ENS that expires, do you know how those auctions work?
No, I don't.
Yeah. So if an ENS name expires, then it gets put up for auction before it gets released. And basically it starts at $100 million.
Let me see if I can read that person. 1 second.
Okay. An ENX auction starts at $100 million. And then every second, it goes down by a certain percentage. And there's this curve that it follows as it goes down. So if you want it right away, just pay $100 million. But if you want to wait 30 minutes, it'll be down to $50 million. And then eventually it's, $1,000. And so whoever is willing to pay the highest amount is going to get it first. And it's very gas efficient to do it that way. But because we're on Arbitrum, we can do these other type of auctions that I think are a little cleaner and leave more room for people to have a smaller arbitrage amount and leak less money. And because gas costs are so low, we can expect that people will be willing to arbitrage for $1, right? And if we're only leaking $1 per auction, that is a very good deal for us, because it only costs 1 cent to send the transaction.
Yeah, that would be a very efficient series of events. That actually brings up something that we haven't touched on yet, and that is the decision to deploy on Arbitrum. How have you found developing on the Arbitrum ecosystem, and do you think it was the right decision?
Yeah, I really like Arbitrum. High is already on Optimism. There was an Arbitrum native stablecoin called Vesta, and it collapsed.
Yes, it did.
Yeah,
It was
okay.
offering some like crazy 200% APR before it collapsed, but it did collapse.
Yeah, turns out that was not sustainable. That was not a good plan.
Shocked Pikachu face.
Shocked Pikachu. Surprise. Stablecoins can't have 200% yield. It's not real. So Vesta didn't really work out, and I think there's this big hole that we're trying to fill right now for an Arbitrum native stablecoin that's specifically backed by LSTs and really high quality assets. I love building on Arbitrum. It's fast, it's cheap, it has fraud proofs. I think it's the besides maybe some new ZK ones coming out now. I think it's way ahead of every other optimistic roll up that's out there right now. And we've also already got a 25,000 ARB grant for short-term incentives. So there's a proposal right now live on our governance forum and on our tally that's on chain to move those ARB tokens from our treasury and start adding some incentives for people depositing rETH into Open Dollar and LPing those OD Open Dollar stablecoin tokens. So we're gonna have ARB incentives, we're gonna have ODG incentives, our governance token, and maybe ask the Rocket Pool Treasury for some RPL on top. I don't know. Who knows? Nobody knows what the future holds.
Yeah, that does sound very exciting. I can say that because I serve on the incentive management committee, we are pretty widely opposed to incentivizing leverage directly. But we are in favor of liquidity incentives. So, for example, if you wanted to do a campaign on rETH OD on Camelot, that's something we could explore in the future.
Yeah, that would be awesome.
Yeah, but Arbitrum, the ecosystem is phenomenal. We've had pretty solid rETH adoption there, and so liquidity should be enough to handle the onboarding of OD.
Yeah, it is, and Arbitrum has attracted more LSTs than every other chain combined, or every other L2 combined, I should say. And so it's really the right place to build an rETH backed stablecoin right now. It's a really good time.
So, could you tell us a little bit about the Open Dollar roadmap? Like, what is coming up in the near future?
Yeah, so number one is incentives, turning on incentives in the next few days and getting that boosted so that we can have enough liquidity there to safely turn on the PI controller. And once the PI controller is on, that we're going to publish some really cool research on that soon, and we're going to see the effects of this repricing debt mechanism, and that's going to give people a lot more arbitrage opportunity. So we've got some really great research on the PI controller. Then we're going to be working on a new NFT marketplace that is totally optimized for trading loans and trading debt positions. And that will be later this year. We've also got a new project that we're announcing at Consensus in 2 weeks, but I'm just going to tell you about it now because I love
Sweet.
you guys.
Hey.
It's called Treasury Backed Loans, and it's a special savior module so that if a loan is ever liquidated, when the liquidation happens, it instead calls a savior module first. And so we've built that such that if you have a DAO treasury with a bunch of rETH in it, you can deposit that into Open Dollar and borrow stablecoin. And if that position were ever to be liquidated, instead of being liquidated, it automatically pulls from the DAO treasury, adds more collateral, and takes the position out of liquidation range. And
Got
so
it.
and so for the Rocket Pool treasury that has, quite a bit of funds in it, or the Arbitrum treasury, which has, several $1 billion of ARB token in it, they should be able to borrow against that entire position without giving over custody, right? So the DAO maintains complete custody of those tokens, but if they ever need to shore up and add more collateral to prevent liquidation, they can pre-approve the savior module that we've created, and it can automatically pull those tokens in and prevent every liquidation. So it's not risk-free, obviously, but it's very, very close to it, especially if you have several $billion in your treasury to, back these type of loans. So we're excited to work with the Arbitrum Treasury Sustainability Working Group and, try to get a few $100 million of ARB token deposited into Open Dollar soon.
So would this backstopping loan, would they be able to set what percentage of the overall funds are available for backstopping? Or is it like
Yes.
okay, sweet. Very interesting.
Yeah, so no one has done it yet, and it's not live yet. And we're going to be making a proposal later this week to ask for some more funding to research and finish the development on this. But that's one of the most exciting things on the roadmap, I think, right now.
And this is distinct from the standard DeFi saver, summer.fi liquidation saver, which would close the collateral position just before liquidation, sometimes failing to do so if the market moves too fast against you. This is instead introducing more collateral to the system.
Right. And so that might not work for every type of user, right? We're actually just started a DeFi Savior integration. So I'm hoping that will be on the roadmap soon too. But yeah, this is different. It's not closing your position, it's keeping it open. And it's really built for DAO treasuries or funds that want to, keep not deposit everything into Open Dollar at once, but keep custody over their funds. And I think, working with Arbitrum DAO treasury groups is going to be important for us. So I hope it will come together.
Who knows? You might be right.
It's probably not for like the average user, I think, but there'll be more safety modules that we'll be building for more types of, liquidation prevention strategies.
We have a question coming in from chat. Would this have been useful for saving Michael's CRV position?
Yeah, I mean, for those who don't know, Michael, one of the founders of Curve, and put like way too much CRV into Aave. And
Frax and Prisma and like everywhere he could find leverage.
Yeah, basically everywhere, because he doesn't want to be responsible for selling all these tokens. He just wants to borrow against them and then have a few $100 million in cash and never pay back his loans ever, which is bad for those lending protocols because it means you're about to get saddled with a ton of bad debt that there's not enough liquidity in the market to actually liquidate those positions. And so maybe it would work for him, to be able to shore up his position. I don't think we want to work with, we don't want to add Curve token as a collateral type because we don't want to be in this scenario. But I think the main safety mechanism in Open Dollar to prevent that kind of scenario is very conservative maximum debt limits for each collateral type. So, for example, ARB token, you can only borrow 5 million OD total in the whole system against ARB token, right? Which is really not that much. So we're not going to ask, for the DAO treasury or some ARB whale or Curve whale. If we added that, they're not going to be able to borrow 100 million at a time. So as long as we keep those debt limits very conservative, we'll always avoid those type of scenarios.
Yeah, that tracks. That was definitely an error on the part of Aave for setting bad debt limits. Is the debt limit something that's going to be controlled in the future by governance?
Yes, debt limit is already 100% controlled by governance.
Got it. Okay, sounds good.
I'm hoping eventually someday we can just make a new PI controller that,
That would be cool.
Its only job is to go set what the debt limit should be based on market conditions. And why do we as people, have to say, well, this is what it should be? Based on my math and my calculations, we can just put that into a smart contract and have the protocol be as ungoverned as possible. But for that one specifically, we're probably pretty far away from that.
Yeah, ultimately what you would need is just like an assessment of market liquidity and market leverage. And then with the ratio of those two, you could assess how much it's comfortable for Open Dollar to do. But unfortunately, assessing market liquidity is not always as easy as it seems. And with future iterations of DEXs like CowSwap and UniV4, it seems like liquidity is actually moving off-chain more and more often, which makes this type of thing even harder to do, unfortunately.
Oh, I was going to say Uniswap v4 will make that easier
Really?
because it means that you can have everybody's money inside of the pool for ETH OD, and then every single time somebody swaps, you can just send a message to Open Dollar's protocol that says this is how much liquidity is left in the pool on both sides of it, because you have these hooks, you have these callbacks from every single swap, and the protocol can react much more directly to that.
But then you're just sensitive to that one pool. I guess that would work for the Unity 4 pools, but then you still have the difficulty of pools that keep most of their liquidity off-chain, like a CowSwap.
You're definitely right about that in terms of off-chain liquidity.
Right. So moving on to one of my last questions here, what is the audit cycle been like for Open Dollar, and what is your approach to security generally?
Yeah, I mean, obviously, security is number one to us. We probably could have launched, 2 months ago, but we decided, hey, let's wait for one more audit to complete, and we're trying to build something that lasts here at Jasper. Trying to build something that is going to be around in 100 years. So security is obviously the absolute top, most important priority that we have. We did a $35,000 contest with Code Arena, and that came up with several medium-sized, medium-level bugs and lots of gas optimizations and low-level ones. 0 high-level and 0 critical bugs were found in that audit contest. Then we did another full audit of the entire protocol with QuantStamp. That completed a few weeks ago, and also had 0 high level and 0 critical level bugs found. And then we did a scan with this company called Pessimistic, which is they got a grant from Arbitrum to do security scans and fuzzing tests on Arbitrum protocols before they launch. So we took advantage of that. Basically every opportunity that we have to do more audits or find funding for them, we will take. And then we did a 4th audit on just the relayers with Pashov's security group, and that also went pretty well. All those issues are verified. All issues found are verified, fixed, and you can check out our audit section in our docs to go through every single commit where we said this is the commit that solves each issue that's been reported. We're planning on creating a bounty, a security bounty program later, and yeah, I mean it's top priority for us.
Yeah, that's a very thorough a route there, and similar to the rocket pool approach. Glad to see you guys taking security very seriously.
Yes, definitely.
That just about brings me to the end of my prepared questions. It's been a pleasure talking to you today. Really enlightening conversation, especially with the discussion around debt markets. I can't wait to see that live and see how that essentially new primitive plays out in the market.
Jasper, it's going to be so cool to see people trading huge loans backed by rETH. It's going to be a whole new way to trade these type of LSTs. I really hope Open Dollar is going to be the first to market with interest rate swaps between different LSTs, and the possibilities are very exciting to me. So thank you so much for having us on. If you're listening to this and you're an rETH holder, please consider depositing into Open Dollar and borrowing the OD stablecoin against your rETH for 1.75%, which I think is pretty much the lowest that you can get
Wow.
anywhere on a stablecoin.
Wow, that's low.
It is really low because our cost of capital is zero. Every time you borrow, we're minting new OD stablecoins, so you get the best rate anywhere. So please consider doing that. And yeah, we love to grow alongside Rocket Pool and work together on as much as we can.
Thank you again so much for being here. Where can our listeners find you guys and learn more?
Yeah, you can go to opendollar.com and learn more about us there, or on Twitter at open_dollar.
Well, Cup of Joseph and Tim, it has been a pleasure having you guys here talking with the Rocket Pool community. I hope this is not the last time we see you guys around here and that you guys become a regular feature. And I look forward to seeing you guys progress.
Yeah, thanks, Jasper. Thanks for having us on and for listening, everybody. Really appreciate the invite. And yeah, this has been a ton of fun.
All right, everyone. Thanks for listening, and I'll catch you guys all on the next community call. Bye.
Thanks for having us, guys. We'll see you around.